you here. If you are joining us on YouTube, or you're watching this later on demand, then by all means make sure that you subscribe to our YouTube channel. There, it's just on the click of the button underneath, and you will also be able to give us a little bit of feedback if you found this video useful, or if not. We appreciate all feedback. It all helps us improve the resources and the webinars that we're able to make available to you. Today, what we're going to be talking about is, really, what has happened to the Chinese stock markets after a pretty rampaging start to the year. We've started to sort of have a few challenges over the last couple of months. So it's a fascinating subject we can get to chat about, and also really about, actually how can we engage, okay, how we can sort of take part in that ourselves. But as I said, I hope you can all hear me. I hope you can all see me. You're all very welcome. And without further ado, why don't we sort of just switch across to the slides, and let's have a chat about what's been going on in the Chinese stock market. So just bear with us a second. Let's just bring up these slides here for you. Okay, we'll be able to crack on. So just here we go. Brilliant, excellent. So. As I said, I hope you can all hear me. I hope you can see me, and most importantly, I hope that you can see the slides for us to chat about what has happened to the Chinese stock market. As always, ladies and gentlemen, I appreciate that here at Admirals we have a global audience. We have people who join us from really all over the world, and we also have a real broad range of people who join us. Okay, from people who've just started trading to people who've been trading for quite a while. And so it'd be fascinating for me to know, okay, to understand what, if any, experience or exposure you may have towards the Chinese stock market. Maybe you don't really keep an eye on it, okay, but you've just been triggered a little bit by what you've seen in the news recently. Maybe you've been accustomed to watching it and sort of trading around it by various manners and ways. And you might have some great insight or some great thoughts. Either way, it'd be great. You can put it in the chat box, or as I said, if you're watching this on our YouTube stream, well then by all means you can just clatter it way there into the comments box, and my wonderful assistant Anna will be able to pick you up and help you with that. So, as I said, we're going to talk about what's happened to the Chinese stock market. It's a fascinating subject, okay, and it is one that is becoming increasingly more important to us wherever you are in the world, just because of the increasing nature of China's position in the world. But before we get into that, let's just have a quick flick through. Remember, here we are, Admirals, a Forex and CFD broker with a wide range of financial instruments, global broker with local support, licensed and regulated across a wide range of regulatory environments, providing the competitive spreads on the most popular trading products, and allowing you the opportunity to engage with markets using both the MT4 and MT5 platform, and also the Admirals Supreme Edition. If you've got any questions about Admirals, please get in touch with your account representative, and they'll be very happy to help guide you. And as always, we like to keep you up to date with what's coming out from Admirals, and one of the latest elements is copy trading. If you are a successful trader who would like to build a trading business, this may be of interest to you. Or alternatively, if you're a new trader and want to be able to sort of follow the trading of successful traders, then copy trading might be the tool for you. As I said, get in touch with the account representative, and they'll be very happy to help guide you. And for those of you who are social media savvy, you're very welcome to follow us on Instagram. You can see there our name there at Admirals Global. By all means, go to Instagram, give us a follow, and you'll find a range of posts there from our team here at Admirals, who will be able to sort of just give you all sorts of insight, resources, and also let you know when these next fabulous webinars are occurring. So what should we talk about today in terms of what we're going to be looking at? Well, we'll talk a little bit, what's happened to China, what has happened to Chinese stock markets themselves. We'll talk a little bit about, what is the volatility we've seen recently? What are the things that have been coming towards, generating what you might say is a perfect storm? What has caused it? Okay, how can we see it in financial markets? And how will it play out, and how will it play out in terms of that we might actually be able to engage with as traders, investors in markets there. So Carol there says, he's invested in Alibaba and NetT stocks. That's great to hear. I appreciate what your own thoughts are, Carol. There, okay. As I said, it always helps to sort of see, who we have here. As I said, I appreciate we have a wide range of experience of traders and investors join us for our particular sessions. So hopefully for Carol and for the rest of you, might just give you a little bit of insight, a little bit of help. Okay, if you are invested there, might also just give you a little bit of an opportunity to sort of get some further insight in terms of how you engage and how you manage your own exposure. So for those who don't know me, my name's Paul. I started trading a long time ago. I've traded for hedge funds and for high net worth individuals. My primary trading is along FX indices and commodities. I tend to be a trend trader for the longer term trend trading, and then I tend to be a reversal and mean reversion trader for shorter time frame intraday trading. So let's dig into the main core of our session this evening. So what has happened to the Chinese stock market? It'll be interesting to hear. Maybe Carol, maybe others here. You might have your own views. Okay, what you've seen or what you've read. Or, what your own thoughts, what your own opinions are. It's always useful for us to hear them. Okay, it's always great to know. I don't claim to be the all-seeing eye of all sorts of all the knowledge and news about the Chinese stock markets. Far from it. I can only give you a take based upon my own view, my own experiences, okay, of trading and actually having to keep an eye on Chinese stock market. So any other view or interest is always useful to us. But as the slide says there, over the last 40 years, the Chinese economy has been a success story as they embraced elements of Western free market principles that were aligned with their own socialist model. And in terms of financial markets, okay, in terms of financial markets, China's response to the 2020 pandemic might be seen as an almost perfect response, which we'll look at in a bit more detail in a few slides' time. What it did enable to do is it enabled China to effectively start to catch up with the United States in terms of size of economy, okay, and in terms of becoming the world's leading economy. And we had a very promising start to 2021, all right? Yet what we've seen over the last few months is we've seen the wheels start to sort of come a little bit unstuck off that Chinese powertrain, for want of a better word. And of course, when we see that happen, we're going to ask, well, why is that? What we have to recognize now, of course, is Chinese stock markets are the second biggest in the world, only second to the United States. So invariably, when we see elements happen to them, events happen to that, whether they be bullish or bearish, well, not undoubtedly, that also will have ripples around the globe and will play out in lots of different ways. And as traders, we want to be aware of that to be able to mitigate any kind of risk exposure we have, but equally have a look at, are there ways that we can effectively take advantage of that? Are there ways that we can actually embrace that and engage with that? So today, what we'll do is we'll look at what has happened and see how, as traders, we can take advantage of it and also perhaps mitigate any risks any sort of tail risks that might kind of ripple out around the globe. But as I said, if you've got your own thoughts, your own considerations, okay, maybe you've got experience, maybe you understand those markets well yourself. That'd be great to hear. Okay, great to hear what your own particular thoughts are, where actually you consider that coming from, because as I said, everybody can basically learn from those different, kind of the different exposure and the different insight through that. So if very quickly, because as I said, I appreciate we have a global audience, we have a range of people who come and join us. Okay, all right. If we look at this, in terms of, where did this the Chinese stock markets, come from? How have they sort of, developed over these last 40 years or so? You'd probably have to say it started with the sort of Chairman Deng there back in 1979 and his open door policy. Things weren't great in China at that time. Okay, they were struggling, and invariably he made a decision to effectively, open the doors on China. And what became is a sort of hybridization of the Chinese socialist models with the market economies that we are used to in the West. You have to, regardless of your own particular views, you have to recognize that, by doing that policy, it helped lift 800 million people out of poverty. And it had got to a point where a couple of years ago, it was effectively creating 2 billionaires a week from 2017. And you think about that, that is, those 30, 40 years, that is quite a swing, an absolute shift. And even on a personal and socialist elements, you saw things like life expectancy rose, as it says there, from 43.7 years in 1960 to 80 years today. That is a huge change. Okay, it's a huge shift. Massive changes in demographics. And by next year, 2022, what they reckon is that 76% of China's urban population would be classed as middle class. And they have to think about, the kind of that demographic, what it had when we see that in America, when we see that in Europe, when we see that in other parts of the world. Middle class have an awful lot of spending power, okay, and that makes a big difference to economies. And as part of that, as part of their strategy, effectively, China has now ended up as one of the biggest holders of US treasuries, okay? One of the biggest holders of US debt, you might say, they're effectively one of America's biggest, sort of lending banks is China, depending on how you wish to look at it. But either way, regardless of your particular thoughts or views, in the last 40 years, okay, that has been a massive, absolute huge shift, okay, in China itself, and that has had impacts, effectively across the globe, okay, across the globe. That we will talk a little bit more about that over the next few slides. When we look at what's really happened over the last year or two, well, as I said earlier, many people would view, if you're looking through the prism of financial markets, that their response to the pandemic was ideal. Okay, they because of some of the steps they took, the markets did not drop or collapse in the same way that we saw here in the West, for whatever reason you particularly want to look at that. And what we saw as part of that, we saw the Chinese yuan, the offshore renminbi, that strengthened incredibly against the United States dollar, which we'll look at in a few charts. And with that, well, then very, what we saw is, effectively China went on a bit of a buying spree of commodities, driving some of those commodities to new highs. And we'll have a little look in a few slides' time to have a look at that. What we also saw was that, the US election of November 2020 saw Trump being removed, which many people would see as a bit of a pro-China move. What had happened is, for those last couple of years of Mr. Trump's presidency, there had been, you might call it effectively, some people might call it trade negotiations, other people might call it trade war. But either way, okay, it was seen that, Mr. Trump was trying to drive a hard bargain on China, and invariably that would have an impact on China itself, Chinese stock markets, and China's ability to maneuver within the world. So Trump being removed was actually, you might call that as a bit of a pro-China move. That was effectively a very good move for China. And so as I said, throughout 2020 and into early 2021, we saw, fantastic moves both in, some Chinese stocks, but also in terms of, their, what they were particularly buying and selling throughout the world, and how they're using that to effectively exert influence. But what we've seen is over the last sort of, couple of months is that, we've started to see a change in that. There's been some shifts in that going on. And as I said earlier, China, because it is now the sort of second stock market, after the United States, if there are ripples on that, well, invariably, we're all going to feel elements of that. And actually, that's what we've seen. Okay, if you're looking at particularly what's happening in, US stock markets and, and European stock markets over the last couple of weeks. So what seems to have gone wrong? What seems to be going on? Well, I don't in any way consider myself a China specialist, certainly not in terms of understanding the domestic, the domestic side of China. Really what we're doing is, we're looking at, the kind of the information, the news we have, and in order to build a picture, okay, about, how we can see that affect markets. And President Xi is there, who has, has been in power for a good few years now, and has basically, sort of tried to ride a sort of, what had been seen to be kind of a moderate path, relatively, between the sort of, the hardliners and the moderates. Well, what we've seen over the last year or so is that, President Xi, he's been looking to consolidate his hold on power. And what he's taken is he's taken a few moves over the sort of in the last, we'd say, sort of 6 or 7 months in particular, that have started to have an impact, okay, on the Chinese economy, Chinese stock market, and then invariably global stock markets. So, one of the things he did a few months ago is that he started to put curbs on e-commerce, social media, and private education industries and companies that were on the sort of, Chinese stock markets. That invariably had huge impacts to those individual companies, but invariably both the direct institutional investors and just normal investors, okay, who were either buying ETFs or investing in funds that were invested in China, were all taking particular hits for that. What we've also seen is, on a domestic side, is that artists, celebrities, reality TV, they've all been deplatformed. Now, if you're an old man like me, getting reality TV taken off, you might think that is actually a fantastic move. I will leave you to yourself to make your own decision or come to your own conclusion about that. But what has happened is that has increased into even things like computer game curbs for children. So we've seen children are now, I think, only allowed like 1 to 2 hours a week on computer games. So once again, some parents might think that that is actually a fabulous move. I'll leave you to draw your own conclusion there. But invariably, putting those curbs, okay, starting to sort of, those tentacles of power being able to sort of seep further and further into people's lives, also has an impact on the particular companies that are either providing those products, services, etc. What we've also seen is, there are problems with China's credit cycle, okay, where they are. There's, actually huge issues there with the sort of the credits and the debts that they have accumulated, and finding a way to actually work with that. We also saw about a year or so ago problems with democracy protesters, especially in Hong Kong, as sort of as the let's say the kind of local sort of state structures were invariably trying to sort of increase their own holds on power, and actually how that had an impact in terms of the protests for democracy, which we have seen elements of, but people were worried that might actually kind of sort of seep into other parts of Chinese life. We've also had issues with China's position on Taiwan. President Xi has kind of effectively committed to basically bringing Taiwan back within the fold of sort of mainland China. And also there has been friction with some of China's neighbors. So in particular, countries like India, Japan, Australia, etc., even a little bit with Vietnam, they have all caused issues. There is friction there that is increasing. We've also had problems with the Chinese in terms of their power, okay, in terms of here in the UK and in Europe, we've been talking about struggling with power, especially coming to winter. But actually, it's a much smaller compared to some of the problems that China has with effectively getting power to its people, and in particular, a couple of areas where they're really struggling with power. And those are for areas where nearly 100 million people live. It's on a scale much bigger than we see in, let's say, in individual countries here in the West. That has also, I think, personally been linked into some of the curbs that we have seen in China and its response to cryptocurrency, Bitcoin, etc. Effectively, only over the last week or so, China has once again effectively banned mining for cryptocurrencies and banned trading in cryptocurrencies. Part of that, I think, is an element of wanting to effectively control local markets. It's also a way if they don't want particularly people getting money out of China. But equally, also, mining cryptocurrency takes a lot of energy and power. And if you've got an energy problem, well, invariably that's one quick way to sort of help with that. So there is a lot of problems there. There are a lot of challenges for both Xi, the Chinese Communist Party, and invariably those local stock markets to actually deal with and take on board. Okay, there's a little bit of a perfect storm that has been brewing. And because our own media have focused perhaps on some of our own issues and some of our own ways that we have dealt with the recent pandemic, this has been allowed to sort of fly under the radar. It's effectively not really being covered as deeply as it perhaps should be, because it's the second largest economy in the world. If there are problems there, it will have an impact. Okay, so let's have a little look at the Chinese stock markets themselves and start to put this into into kind of some visual representations we can see about what has actually been going on. So, Chinese stock markets, once again, I'm just going to give a very basic basic insight. I appreciate that some people will, be completely new, completely, just trying to understand stock markets generally, let alone focus on Chinese stock markets. But effectively, the sort of kind of the main Chinese stock market would be seen as the Shanghai Stock Exchange, all right, double SE. There's also a Shenzhen, another stock exchange in Shenzhen, and then we have what has always been a longest-standing Hong Kong stock exchange, the Hang Seng. Okay, all of which we will look at in a little bit of moment. Now, because of some of the rules within China, which have changed, okay, invariably, foreigners are now allowed to invest in trade in certain areas, certain particular stocks within the Chinese stock markets, as it says there. Foreign investors can invest in what we would call B-class shares in Shanghai and Shenzhen. They have effectively A-class and B-class shares. Sometimes what kind of people get a little bit caught up in is that shares are traded in US dollars on the Shanghai Stock Exchange, and shares are traded in Hong Kong dollars on the Shenzhen Stock Exchange. However, the face value of them is listed in renminbi, the Chinese currency. And what you'll find is shares sold to domestic Chinese investors are denominated in renminbi anyway, which would probably make sense. And invariably, what you can see is, Chinese investors can trade, A shares, Class A shares in the secondary market, just like institutions would trade in the secondary market here on our own particular stock exchanges. So, reading that, looking at might make it look a little bit complex or a little bit opaque or a little bit, a little bit not entirely sort of clear as a stock market. But, we as traders, we're just looking at what, markets are showing us and trying to identify, what is actually going on in terms of building ourselves a picture so that we can sort of trade appropriately. And if we looked at, I think the next chart, yeah, here we go. Let me just move myself out of the way. This is a weekly chart, okay, of the Shanghai Stock Exchange, okay? It's a weekly chart. And if you were to look at that chart there, you might say, well, I don't really know what's the problem, Paul. I don't see that as a massive issue there. Let's get the old drawing tool here, shall we? You might be looking at that saying, well, you know what, we're basically kind of those highs we saw at 2018. We came down and double bottom there. Okay, very nice double bottom there at so here we go into 2019. And then, once again, if you look at the moves we saw, the fall we saw, during the kind of start of the COVID crash in 2020, it actually wasn't that much considering to what we've seen in Western. And invariably, you might say, okay, just excuse my artistry, but, I'm a better trader than I'm an artist. But, you might actually be saying, well, do you know what, Paul? Since then, on the weekly chart, we've actually just been grinding our way up in a sort of bullish channel. Yes, we've had a little bit of a double top there, and we've come off that kind of recent high, but we're still within that particular channel, all right? And many people might just particularly say that and look at that in that particular way. And I wouldn't necessarily disagree with you, okay, when you're just looking at that of the kind of the Shanghai exchange, okay, that's you might be worrying or watching that and say, we're looking at the kind of the 3600 level, all right, we'd want to see us kind of stay above that, but there's nothing really terribly worrying about that. So when we start to look at a few of the other exchanges, that we start to get a little bit of an idea of, well, actually, hang on a minute, what's going on. So that was the Shanghai Stock Exchange. This is the China A50. So this is kind of, what some people would reflect as a more natural reflection of Chinese stocks that are able to be their exposure to, foreign investors. Okay, so some people might describe it a little bit differently, but for the purposes of here this evening, that's what we're going to look at as the China A50. Okay, 50 top shares that in China that can effectively be sort of bought and sold by foreign traders and investors, and it's there where we start to see the picture's changed sort of a little bit there, a little bit considerably. Once again, bring up the old drawing tool here, okay. And I've been talking about my for a few months now with my own clients about how actually 15,000 has been an interesting level for us, okay, having sort of tapped it at sort of back in 2018. Then, we saw a bit like what we saw in that Shanghai, exchange coming into the start of 2019, a little bit of a low there, and we've kind of ground our way up there. once again, that was effectively the kind of COVID crash there, and nothing really as drastic as we've seen, and you can see for yourself that actually we had that tremendous bull run. Once we got above 15,000, okay, into last year, it held greatly as support, didn't it? And then we just rallied our way up there, okay, up towards sort of getting towards over 20,000, all right, towards that kind of 21,000 number. Into the start of this year, okay, and that is effectively what we saw from the kind of the lows of the COVID to the highs there, okay. We've gone from 12,000 to sort of to nearly 21,000. So we just added under to sort of just 10,000 points, okay, 9,000, 10,000 points, and that is what we've seen in that particular run there. So it's a case of from that top there, well, actually, what you can see is, we fell away very strongly there. Kind of 16,500 acted as support. It had a bit of a dead cat bounce before it dropped down again, and now we're looking at at kind of that 15,000 level. And if you look, there's been a bit of a triple bottom there. You can see there's definitely wicks there on this weekly chart, okay? So there has been support there so far, and that's what we're kind of watching, okay? Does that 15,000 number hold as support? What we might see is, wouldn't surprise me, is if, maybe we bounced up from 15,000 up to around about that kind of 16,500 level, and then I'd be interested to see what kind of a decision point that, I would view that as a decision point, and we'd be looking at, well, what's it going to do? If it puts, in like a bearish rejection, you might see it dropping down. But as I said, 15,000 is the number I'd be watching, because if we break through that, well, then you're dropping down in towards the kind of 14,000 level, all right? So it has become a line in the sand for us to basically watch, to take a view on. And it might well be that we'll see market manipulation by the major players there to effectively just keep that market above 15,000, okay? So, that is something, even though this is not something I personally particularly trade, it is definitely something that I watch. Remember, these are second largest stock markets in the world. If there's going to be, real problem issues there, it's going to have a knock-on impact, okay? So it is, part of my bigger picture of just keeping a view on what's going on in the world there. And what we'll see is if, this next chart here, this is a chart of ASHR, which is an ETF, okay, an exchange traded fund of China itself, all right? And you will see that if you go into the Admiral's YouTube webinar archive, you'll see, I think my colleague Jens, he's done a couple of webinars on ETFs. So if you want to understand them better, by all means, go and avail yourself of them. But, a little bit like what we've seen on A50, this ETF tracker, okay, is also, and it kind of tracks I think it's the sort of kind of 300 top A shares in a Chinese stock exchange. And invariably, you can see for yourself, okay, the picture isn't necessarily that particular different, okay, in terms of, it didn't drop as far or as deep as we thought it would during the sort of COVID crash. And it rallied and rose very, very strongly up until start of this year, okay, where kind of, as I said, President Xi started to, some of his, kind of curves and some of his, diktats about what was going to happen started to, take the edge off existing shares, but equally also started to worry Western investors. And you can see for yourself there what happened. Okay, we dropped down to around about 38 level. We had that dead cat bounce. We've dropped down there again, and we're now making, okay, we're making lower highs. All right, we're making lower highs, and I think once again we're in a little bit of a decision point. Will this kind of $36 area hold? All right, on the ETF. I think if it does, well then maybe we maybe have a little bounce. But if it doesn't, well then I think then we go down to fill this gap. All right, markets nature abhors a vacuum. Okay, and that's the same in markets. And when there's a vacuum there, I think if we break it, well then we're down to about 31 to fill that gap. Okay, so it's just another reflection, okay, of people's lack of confidence at the moment in the overall Chinese stock markets. And what we can do, is also, this is the Hang Seng, okay? This is the Hang Seng. It's a weekly chart, okay? The Hong Kong index. But just remember, this is something that is actually tradable through the Admirals MetaTrader 4 and MetaTrader 5 platforms. You can find it on there, so you can follow it, you can watch it, and once again, it's kind of it's a similar picture, isn't it? Okay, we had kind of those lows, all right, March 2020. We kind of struggled along a bit before, we started to see, a real rally in that, okay? A real rally, despite, remember, ladies and gentlemen, we started to have those problems with the, democracy protesters there. But once again, okay, what we saw was, that Hang Seng, all right, just topping out there kind of January or February of this year. You can see for yourself, it dropped off, and it went sideways, didn't it? The kind of 200 was acting as support. In the 20, it was pivoting around there, okay? And what we saw is it just going sideways for a few months. But hey, you can see what's happened there, okay, over the last few months, is that has just been one-way traffic, and that has just basically just burnt its way down. So, if you look at, from highs up there over 31,000, we're down towards, 24,000, okay, there, okay? So, that is some drop back, isn't it? There's a drop there, 7,000 sort of points or so, over the over this kind of the last 6 to 7 months, okay, and that's quite considerable. So hopefully that is helping you build that picture on the bigger thing, the kind of the Shanghai, but also the A50, okay, also the Asia ETF, and here the Hang Seng itself. Carl was saying, I wondered why Shanghai Stock Exchange didn't correlate with all the other major world indices. It's not break its top since 2016. That's a very good question, Carol. I can only give you my own personal opinion, is that it marches to the beat of its own drum, and that invariably it is not as correlated with Western indices as we are used to seeing here, as what you see in terms of Western global indexes, whether it be the US, European, Australian, okay, there's a great deal of correlation between them. The SSE, because of the nature of the makeup of that stock exchange, who is allowed to invest in it, how it actually works in regards to controlled by the CCP, it marches to the bang of its own drum, okay, and it's I think many traders and investors have made the mistake of thinking that such exchanges, such stock markets should act exactly how Western stock markets would operate, but that is not the case, ladies and gentlemen. That is just clearly not the case. So, that also has an impact on, currencies. And this is a weekly chart of the US dollar against the Chinese yuan, the offshore renminbi, okay? And you can see for yourself here that, I would say to new traders that, a good trend should leap off the chart at you. And having topped out here, okay, in sort of 2019, 2020, well, you can see what happened there, didn't you? That was just quite some trend. That was effectively dollar weakening across the board, not just against Chinese yuan, but also, the Chinese yuan strengthening there. Because, as I said, people saw, that their response to the pandemic and how they changed was actually probably maybe seen to be better than ourselves in the West. But you can see that. But let's get into 2021, and we start to see, the picture change a little bit. We've actually, kind of hit a couple of lows here, and we're in a, what I think is a kind of an interesting point. We're at an interesting particular decision point. You'd be looking at actually here, just as I said, excuse my artistry, but you're looking at the prices coiling up there. Now, if you were a classical technical analyst, many people would see that as, it's a symmetrical triangle, which is a continuation pattern. So people would be expecting that to consider downwards. But based upon what we're seeing, okay, with those Chinese stock markets, okay, then you start to have to consider, well, actually, hang on a minute, is this a bit of an inverse head and shoulders, which is a reversal pattern? So I think we are at a decision point, okay? We are at a decision point. And, I'm interested to see that effectively in the 20-period moving average has been acting as support. And for me, price has to get above the 50, okay? It's not been above the 50, okay, since, sort of April, May time of last year. It needs to get above there and hold above that for it to convince me that actually we might have seen an inverse head and shoulders bottom there, which would reflect, okay, a strengthening of US dollar and a weakening, okay, of the Chinese yuan. So as I said, I think that's at a decision point, and it's, we're going to watch that play out over the next few weeks. So that's definitely one to add to your watch list, and that might be one way, as I said, that you're able to play this. This is once again tradable through the Admirals platform. Then if we have a little look at, some of the kind of one or two of the particular stocks on the Chinese stock market, I'm sure that, as traders and investors, you will have heard of Evergrande over the last few weeks, as that has been a very public, demonstration of, what has really been going wrong in terms of Chinese stock markets. That is a weekly chart there, okay, and you can see that has been there's kind of really been, as they would say in the UK, a bit of the grand old Duke of York, all right, okay, marched them up to the top of the hill and then marched them down again, and that is what we, have seen, okay, from sort of being around a kind of around about sort of $6 Hong Kong dollars, trading all the way up to 32-ish. What we've seen, as the over the last couple of years is, grinding down, which then accelerated as the particular problems at Evergrande started to become apparent. Evergrande, I think they're the second largest real estate company in China, but they also had, they had fingers in lots of pies. Okay, I think a water business. They bought a football club. They were a massive company. But with that, okay, they generated, they had borrowed money and had debts. People would say they'd have debts of around about, $300 billion US dollars, okay, $300 billion, which is not to be sniffed at. And effectively, that's equivalent of 2% of China's overall GDP. Once again, that's something that starts to get people a bit nervous and a bit worried. And what also has an impact for us, okay, in terms of the rest of the world, is that more than 128 banks and 121 non-banking institutes lent money to Evergrande, okay, over the last few years. And as that company has kind of just imploded effectively, you have to start to think, well, actually, how many of these companies, how many of these institutions, have been exposed to it, and at what size, okay, and how is that going to impact in terms of Evergrande's implosion? It's a property company, but it still has 1.6 million properties yet to be delivered. If you're somebody who's bought an apartment from them, bought a property from them, you're going to be a little bit upset about that if you don't get your particular property. And what we've seen is, the share price has dropped by 90%. This is just one company that, as we looked at a little bit earlier, is having an impact, okay, on, it's a problem for President Xi to deal with. And you have to think about, well, how is he going to deal with this, okay? How is he going to deal with this? Is he going to have to effectively, just basically make good to all of the kind of the creditors, okay, that are, who lent money to Evergrande? Is he going to have to do that? Is he going to look after the people in terms of, the money they invested to buy particular properties? Or maybe he will look after just the local, okay, the local, his domestic kind of, people who are, his problem to deal with, and invariably not bail out any of the, let's say, Western banks and institutions that lent money to Evergrande, which will invariably help him in some respects, because invariably it will further weaken, US and Western economies. So, this, we can see that, they're sort of stepping in, trying to do little bits what they can to how to fix this. But, this is, to a huge company, okay? It's a huge company. It is, I wouldn't, some people have called it, China's Lehman Brothers. I wouldn't go as far as that. It's different. It's different in its makeup, but invariably it is a problem that is going to have to be resolved. And that, how they resolve that is going to be fascinating to see, in terms of President Xi, how he goes about it, but also the impact it has on other Chinese stocks, and also Western opinions about investing and trading in Chinese stocks, okay? Because there will be repercussions. There always are. So, that's just one particular Chinese stock. But as I said, there's bigger, wider implications. And as I said earlier on, what we saw was that China had a little bit of a run there in commodities last year, and we saw some of them were pushed to all-time highs. Here's one. This is copper. Okay, copper futures. Right. Where's most of that coming from? Most of that's coming from Australia. We're going to look at that in a moment. Here you can see, here you can see that COVID crash there, down to those kind of lows around about $2, and look at what happened there. That was just a fantastic run, on copper. The Chinese were buying an awful lot of copper out of Australia up until, sort of, the sort of end of Q1 into Q2 of this year. And what we can see is that actually prices come way down off those highs. And, you might be looking at, there's lower highs there. There's that little bit of a kind of, a descending triangle after a great long run. Once again, I think about, 4 starts to act as a line in the sand there, $4, all right, acts as a line in the sand, we pivoted around it for a bit. It acted as support, there's wicks there. You've got to look at, is price going to just basically bang around it, generating a decision point to say whether actually it basically, it goes, or, it flies or it dies, basically, in old parlance, in which case you're looking down for it drops down towards that 3.25, I reckon. But what you're looking at is, of course, that has an impact. If the Chinese stock market, Chinese economy, if things like Evergrande are going, bust, well, then invariably, sort of, demand for commodities starts to wane, and that invariably has impact on those commodity prices. That is, that invariably all has, huge impacts for us, and that is ways that we might actually see and have the ability to sort of take a play on the effect of the Chinese stock markets. So this was iron ore, all right, iron ore, and then particularly, this is once again, it's a weekly chart, and you can see for yourself that, it was in a little bit of a, you might say it's a little bit of a grand challenge, just excuse my terrible drawing there, but, the idea is you can get the gist from sort of June into 2020, from being there at kind of $80 a ton. What we saw is, price actually rocketed its way up there, and we rocketed its way up to around about 220, or 220, where we had a bit of an unorthodox, I'd say, double top. But you can see for yourself what has actually happened there, Demand just evaporated. Demand has evaporated and a price actually collapsed there, And this is a picture that is starting to sort of, invariably be seen across all of these commodities. This is, invariably the way that we see the impact of those effects on Chinese stock markets, balloon out across the rest of the world. And this is another example. This is Palladium. Once again, this is a tradable product through the Admirals MT4 and MT5 platforms. Weekly chart, hopefully you're starting to get the picture that, 2020 was, into 2021. Great, nice uptrend. A little bit scatty, but you can see generally the gist of it until we topped out here, into sort of March, April into 2021. And then invariably we really did come off the top there, and actually, you might see that is a bit of a 1, 2, 3 double top pattern there, depending upon your scale. We did clearly saw, here on the second one, price tried to rally, forms a lower high with an evening star formation, and then what you can see over the last couple of months is, crikey, that price really has collapsed. So from being up here around about 3,000, 3,000 earlier in the year, we're now down trading around about just under 1,900. That's a big move. It's lost, effectively almost like a third of its price there, in 6-7 months. All of this is, as I say, this is playing out. This is the impact of it, and as I said, that is something that you can you can watch and trade yourself. Platinum was the same, all right, as I said, hopefully getting the trend, the picture from those lows, worked its way up into a nice trend, tops its way out there in a very, that would be an evening star, but it's a very unorthodox one, all right, in sort of February, tries to sort of make another high again, but just can't, makes a lower high here, gets beneath the 20 period moving average, which it hadn't done for 6 months, and you can see for yourself, then the 20 period moving average switches from being support to being resistance. Price drops down to the 50, it tries to bounce, it can't, and it just works its way down. And now we're down here at the 200 period moving average, down at 900 from highs up here, only just around about just under 1,400 down to 900. That's a big move. That's a big drop. And these are big trends and global trends that we see. And for some traders, investors, that is that's the ideal way for them to engage with markets. What we also saw, and what might be a bit closer to home and a bit more easier for people to understand and trade, is this is the Australian dollar against the US dollar on that weekly chart. Australian dollar, many have used it as a proxy, okay, as a proxy for China, because invariably, when China is doing well, it's invariably buying everything out of the ground. Well, effectively buying everything out of the ground in China, and then buying everything built above the ground in Australia, and invariably, that was where an awful lot of Chinese money the trade through. But China and Australia have had a little bit of a trade spat earlier this year. Also, China are unhappy that Australia has now formed with the UK and the US the AUKUS defense pact. Okay, all of these things are elements that are playing. Okay, are coming to the fore. But what we can see here is, COVID crash. Okay, effectively US dollar weakness, Aussie dollar strength, because as we've seen, people buying a lot of those commodities, being pulled out of the ground, okay, in Australia, right up until here, okay, into February, all right, where what we got was, there's a big bearish engulfing key reversal candle on a weekly chart. They don't happen very often, but you always want to keep an eye out when they are printed. You can see for there, yeah, it tried to actually bounce again, but it just couldn't. It was holding on to the 20-period moving average. You can see there. But then once it broke, it dropped. Okay, effectively you can see for yourself there. And now we've been in a kind of a nice downtrend for the last few months, and that's a case of Australian weakness. Okay, off the back of that lack of demand for commodities, at the same time as US dollar strength. Okay, starting to just emerge in the market. So, not only are we seeing that, we looked at the US dollar Chinese yuan chart, but this is another kind of interpretation of it using the proxy of the Australian dollar. And with that, on an Australian theme, you might want to look at the ASX 200, which is the main Australian index itself. Okay, once again, tradable product through the Admirals MetaTrader 4 and MetaTrader 5 platform. And what we can see here is, you're getting the picture by now, I hope, is that, from the lows, we saw fantastic move there, okay, in the ASX. That's my terrible drawing there, but you get the gist, ladies and gentlemen. You can see what the trend is up until recently, okay, where that trend has started to come out, and invariably there's elements of the ASX is a very commodity resource heavy index because of the nature of the Australian economy. But equally, with the issues that have been going on in terms of lockdowns, all of these things have a particular issue. And you can see for yourself that, okay, over the last couple of months, the ASX has come off those highs. That kind of trend has run out of steam. And this might be one for you to watch, okay, and to sort of, be able to trade in correlation with what you're seeing in China, but also what we're seeing across, global economies generally. And if you want to go a step further, we looked at currency, we looked at an index. Well, you can actually look at, individual stocks. This is Caterpillar, okay, company they make, JCBs, diggers, all right. This has been a fabulous chart here, real super dupe double bottom there at the sort of COVID crash, but you can see for yourself, okay, just an absolutely fantastic trend there, isn't it? Absolutely fantastic trend until it wasn't, around about the same time, February, March, April of this year. Kind of tops out there. We had a real big sell-off there, okay, and what we've seen is prices just rolling off there. There's the kind of the 20-period moving average having switched from being support to resistance. We're down beneath sort of $200. We're looking to see how that plays out. If there's if demand for commodities has just collapsed, well, then invariably demand for new diggers will go with that as well. So this is a way for you to actually look at it and have a little play with of that whole scenario in what might be a stock that you can follow easily, and that your stock you might understand. Okay, you can actually you can go out into the road and actually look at Caterpillar products. All right, that might be a way for you to engage with this particular trend, this particular idea. So in conclusion, ladies and gentlemen, all right, regardless of your own personal views, okay, the growth in that Chinese economy over the last 40 years, it has been staggering, okay, it has actually been staggering. And, many would say that the Chinese financial response to the pandemic was quite impressive, as it said, seen through the prism of financial markets. And you can see that basically China went on a commodities buying spree. You've just looked at that across, a wide range of different commodities. However, there's problems that have been building up in China, okay? We talked about that. And President Xi's crackdowns are hurting local markets and they're also, making global markets nervous because, foreign investors are starting to lose confidence, okay, in what's going on in China. What we can see, and hopefully what I've been able to share with you, is that, we can engage with these events, okay, engage with this change of trend through some just the regular indices, okay, Hang Seng, ASX are available to be traded through Admirals, but also, FX and one or two particular equity plays, because, as I always like to tell people, regardless of what's going on in the world, there are always opportunities, okay? If you're educated, if you're prepared, all right, and you're able to sort of, put yourself in a position to take advantage of that. So that's us drawing a close here. Don't forget to join us next time. So at the same time, or actually on 2 o'clock, back at the normal time, Friday, you can join my colleague Jens, and he's going to talk about scalping with pivot points, including introduction to pivot points, what are Camarilla points, how to calculate Camarilla points, and 3 different Camarilla day trading strategies. So that'll be 2 o'clock London time, Friday, the 1st of October. So, it's as always, if you've got questions, you've got thoughts, by all means, you can always get in touch with us here at Admirals. Okay, you can email global@admiralmarkets.com if you wish to. And of course, this video, along with all the others, will be on the webinar archive on the Admirals youtube.com channel there. Okay, I lost that for the want of words. So, ladies and gentlemen, that draws us to a close. I hope you found that useful. I hope that's giving just a little bit of insight into what has been going on, and also how that's playing out in markets, and also how you can actually watch this, be aware of this, okay, and maybe engage with this, trading it through elements on the Admirals platform. As always, if you're, if you're watching here, okay, if you're watching this, okay, by all means, make sure that you're subscribing to the YouTube channel. If you've liked this, please give us a like up. We appreciate it. Or if it wasn't, I don't mind that. We appreciate all the kind of feedback that we get. As always, okay, it's down to me to say, I wish you the very best success in your own trading endeavors. Have a fabulous trading week, ladies and gentlemen, and I look forward to speaking to you soon. Trade well, everybody, and thanks very much. Cheers.